Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show. They are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Okay, so, first stock I want to talk about today is CCJ, Cameco. Now, this is a uranium play here, so this stock is going to follow the price of uranium. And they just reported earnings, so I have yet to look over the conference call. I'm not in these calls yet. We're gonna be looking at these calls tomorrow here, possibly even looking at the stock. I do like the material space here. However, there was some massive call buying here, all the way up to the June 37 strike calls. 22,000 options traded, open interest of only 45. You can see here from all the large open interest, they have been accumulating calls in this stock ever since the earnings report. So huge block trades going off here. A lot of this volume here is buys. A lot of this open interest here is buys. Some of these other expirations as well. You know, you can just scroll through and take a look here. There's a whole lot of call buying here in a bunch of different expirations here. Now this has been a pretty hot stock over the last, even here. Look at all this volume. You know, you can go into the time of sales and check it out, see kind of what's going on. This is definitely institutional volume here. 37,000 contracts traded. That is a whole bunch of contracts. This stock does tend to hit quite often for unusual options activity, and it usually follows the same pattern of just massive block trades going off. Now, this stock has had a huge run here, as you can see, from the pandemic low of about 5. That low is kind of getting irrelevant at this point. I think it's just interesting to look at it. But when this stock gets moving, you can see it really carries a lot of momentum here. I usually like to play uranium through the Global X Uranium ETF. I think the ticker is URA. So you can also check that one out if you like the uranium space here. A lot of talk about uranium being a renewable energy source. I know people have talked about that in the past. That's not really one of the reasons why I'm buying this. Just, another commodity play, another material play. This definitely might be one to keep your eye on. So, we're not in these calls yet. Going to do a little more research on the company. Sometimes I like to just step back, get in the trade a couple days later if it pulls back. And if it doesn't pull back, then, there's always another trade. I've really been having a lot of luck with that. You see the unusual options activity and you try to get in at a lower price than they got in, and then potentially even sell it where they got in. So you can make a nice profit while the institution is just getting even. So that is definitely a good strategy that I'm deploying in this market, especially when everything is so volatile and you can most likely get a better entry point. Okay, next one I want to talk about is KKR. Now this is an asset manager here. You can see from the chart we've had a nice little pullback here. So I do like that. I like the valuation on this one. I think it's about low teens or high single digit price to earnings. So it's a pretty cheap stock. You can see here about 12,000 contracts traded here. Open interest of about 706. I like that volume to open interest ratio. I like that these are pretty short-term calls here. I don't want to spend a lot of the premium. I don't want to spend a lot of time premium or a lot of extra money to get longer dated calls here because of just how volatile this market is. You got to be quick to cut your losses. You got to be quick to take profits as well. There's, like I said before, there's no 100, 200, 1,000% return option trades in this market. At least I'm not having any because I take profits quick, and that is usually the right call in this market. Just you can see today the S&P, right on a dime from a tweet or a conversation from one of the Fed governors, and the S&P went from unchanged to down 2%, which if you follow the markets, that's a pretty sizable move for a diversified basket of 500 stocks, which is the S&P 500. So I like these calls here, like the volume to open interest ratio, like that they're shorter term, and I really like how far out of the money these calls are. I think we got filled on these around 30 cents. So we have a little bit of a loss right now, but that's okay. We're going to be quick to cut the losses. We got in cheaper than when the institutions got in, so that is definitely a plus. This stock was down about 4% today. As you can see here, we've had a nice little pullback here, closed right at the 200-day moving average. In my opinion, I think we hold the 200-day. I think we get a nice little bounce here and make a nice little profit on these calls. And we'll see what happens, everyone. So thanks for everyone who has been subscribing. Thanks for everyone who has been sticking with me over the last, I think we're going to be coming up on a couple of years of my channel now. So I really appreciate everybody liking the videos. Make sure to leave a comment down below if you got any questions, and we'll see you in the next one.